Thank you for tuning in to another great video by Destiny. Over the years, Margaret Lomas has answered hundreds of viewer questions about many aspects of property investing. Here's one of them.
Hi Margaret, I've recently bought an investment property and I wish to maximise depreciation. In the market there are so many quantity surveyors. How do I go about finding the best one? Are they all the same? Well, Daniel, maximising depreciation on a property is really important as it adds to the cash flow and it can turn a previously negatively geared property into a positive cash flow one. Even in a low interest rate environment, the possibility of achieving a positively geared result in your property investing, where raw rents exceed the raw expenses and then you pay tax, is very limited to those areas with unusually high rental yields, and these are usually areas based on one industry and with a greater risk to the investor. Where you've purchased in an area with more normal yields in the 5 to 6% range, on-paper deductions, which are the items which don't add to the expense ledger, can result in an extra tax break. Now, this extra tax can plug up that shortfall between what comes in and what goes out, and it can help you stay in the market longer as your holding costs are better covered. Finding a quantity surveyor who's going to maximise these deductions is a really important part of the investing process. Understanding how they perform their calculations can often help you to narrow down the good ones. Here are some tips. Depreciation allowances themselves don't change from company to company. There is a prescribed amount which can be claimed on plant, equipment and buildings and the period of time over which they can be claimed. It's the way that a quantity surveyor does their estimating that creates the difference in two different reports from two different companies. A quantity surveyor must look into the past and establish what the original construction costs may have been for your property and estimate the value of all items within that property. Now, the first part's easier as there are tables which outline construction costs according to the years in which they are affected, but estimating a second-hand value on an item which requires much greater expertise can be a lot harder. Now, I'd suggest that you ensure that the company that you choose employs only duly qualified people and has a fairly long history in the business. Next, ask for a copy of a sample report and compare them across a couple of companies. These sample reports often contain similar sample properties, so you can see how they differ from each other. Lastly, nothing's as good as a testimonial from satisfied clients. If they can provide testimonials from people who use them over and over again, this can tell you much more than you can ever know from asking the company itself if they think they're good.
Thank you for watching this great video by Margaret Lomas of Destiny Financial Solutions. Destiny has been helping investors for more than 20 years. Our fantastic intensive property coaching program will guide you through the property investing maze and ensure you acquire a great property portfolio faster than you can imagine. To find out more or to have a free no obligation consultation, call now on 1300 693 378 or visit our website destiny.com.au.